Let's get across the charts though. Tony Sycamore from IG joins me now, and once again some big moves coming through in the Nasdaq, leading gains overnight. What do you see?
We sound like a broken record, don't we? Every morning we're coming on record highs for the S&P, record highs for the Nasdaq. But look, you cannot argue with that price action. As you mentioned, some supportive tones from Fed Chair Powell, which I think probably paved the way for the Fed to signal a rate cut in September at the July FOMC meeting or at the Humphrey Hawkins Symposium. So very close to getting to where we need to be. Not quite there yet, but that doesn't matter for the Nasdaq. What you can see there is the rally is starting to look more and more parabolic. And to me, if we came back and chatted in 2 months' time and said, hey, look, the Nasdaq 100 is trading at 22,000, I probably wouldn't be too surprised. But what you can see there is a nice uptrend coming in around 19,000. Well, the first level of support we've got to watch for is 20,000, which is the level that it recently broke above. And then there's some uptrend support coming in around 19,400 to 19,300. Those levels are going to attract dip buyers for very good reason because of that price action. A break below there, then potentially we have to have some second thoughts about where the rally goes from. But at this point in time, it's not something that I want to be chasing, but I definitely don't want to stand in the way of that train.
And we're not chasing it because we're not so tech heavy, we're resource heavy. So what are you seeing on the ASX 200?
Well, it's just absolute whipsaw price action this week. And that's partly to do with we have school holidays here in New South Wales and Victoria this week, and volumes are very, very light. And that means
it's traffic. It's lovely.
Yeah, it's great traffic. So that meant that we're just continuing to trade sideways. And that's been the price action we've seen the ASX 200. Really correcting that rally from that October 67.51 low up to the 79.10 high that we saw in April. The price action to me is a bullish correction since that 79.10 high, coiling like a spring being pressed down. I think it will pop through the top of that trend channel resistance. 78.80 is the first level we need to watch for. And then, of course, if it takes out that all-time high, green light up towards 8,000. But at the moment, in a holding pattern, just waiting.
And the Aussie dollar, because we've got the RBNZ in 20 minutes, we've got China data. What's the resistance level looking like there?
Well, that's right. Yeah, I think probably the more important level to keep in mind is the fact that we have broken higher. We're sitting at 6-month highs. I believe there's going to be good demand back towards 67 cents to 66.80, which is those highs you can see throughout the past 2 to 3 months. And I think we can retest that 68.71 high from late December 2023. So good signs for the Aussie dollar. It is the second best performing currency this year behind sterling, and I think it can probably continue.
When it comes to the commodities market, I mean, so much in terms of the data that we're looking out for in the US, is there sort of that resistance around 80 that you're seeing?
For
WTI?
WTI, well, yeah, it's sort of sitting just above there at the moment. That's certainly popped up to 84.52. But the orange line, which you can see there, is the 200-day moving average. So a bit of heat coming out of the oil market. It's had a fantastic rally, rallied about 17% from that 72.48 low, which was just really a position flush after that OPEC meeting. But given the fact that Hurricane Beryl hasn't created as much impact as we potentially were fearing, and of course, hopefully the situation in Gaza is moving towards a ceasefire, a more peaceful solution, that takes a little bit of heat out of the crude oil market. But there's going to be buyers, and those buyers, to me, sit in that 80.50 to 79.50 band, which is reinforced by that 200-day moving average sitting around 79.30.
So more of a support level, I should have said, rather than resistance.
Yep.
Let's get to Bitcoin now. Everybody's favorite cryptocurrency, always an interesting one to watch. It's getting towards, what is that, 53? I can't quite remember that.
Yeah, so the screens were lighting up. The news wires were lighting up on Friday. It had that flush below 55,000, which is that trend channel support. Broke below the low we saw there in late April, 56,500. But look, as you can see there, it's back above that trend channel support. I need to see it get back above the 200-day moving average, which is that orange line sitting around 58,800, to really confirm that all we saw last Friday was a position wash and that we continue to remain in this corrective holding pattern. And if it can do that, if we can see 2 days above that orange line, I think it probably gives Bitcoin the green light to retest the top of that range, 71 to 72,000. Needing a break above there, of course, to see higher levels. But at this point in time, it's holding in there. It's trying to build a toehold. Just needs to do a little bit more work to the upside to confirm.